Hello, my name is Steve Bigelow with the Candlestick Forum. There is now more evidence that the market has reversed. Unlike all the talking heads that you see on the talking or the news stations are saying, well, this could be the bottom or we're getting near the bottom. We've got much more accurate analysis to tell us that the investor sentiment has changed. You can see the buy signals, a doji, a hammer, and then bullish confirmation with the Dow trading up above the T-line. And it broke this downtrend. Those two factors pretty much tell us there's been a change of investor sentiment, basically confirmed today by more bullish trading telling us this downtrend is over. Now, does this mean we're in a big, strong uptrend? No, all it tells us right now that the bulls are stepping in. Now we have to watch to see how long this trend continues. But there's some other added features with candlestick analysis that enhance the probabilities that a trend has reversed. First of all, we saw a buy signal right here, but notice what it didn't do the next day. It didn't confirm, number one. And number two, look at our 3T line. Just a very simple analysis that if you have a reversal, you want to see a bullish confirmation of a signal, and you want to see the 3T line come up through the T line. Anytime that doesn't happen, that's pretty good evidence that the bulls are not in control. Over here, you can see the T line with the Dow coming up through the T line itself. That was more evidence that investor sentiment had changed. These are simple little techniques that allow a candlestick investor to greatly enhance their analysis of a price movement or a trend reversal. So we saw the same thing here in the NASDAQ. You can see where it based here, a bullish left-right combo, and then bullish confirmation today that closed above the T-line and above this downtrending channel. So the implication is, based upon candlestick reversal signals, there's probably more upside. Now, this allows for us to take advantage or continue to take advantage of the strong sectors. As you recall, last couple of weeks, we've been recommending the lithium mining companies, and you can see what's happened on our position of LTHM. This uptrend, even though it had a slight pullback yesterday, has never closed below the T-line. Now we're at the breakout level, or even this breakout level, that tells us that we could be in a wave 3 of a J-hook pattern. So anytime we can use that information to our advantage, our recommendation on STKL today was based upon, there's your doji, bullish confirmation, off the 200, back up through the T-line, that if it opened positive, you wanted to be buying because that would indicate that we have a J-hook pattern. So you can use that information. CCIX was identified in our chat room today. This one can be bought because if they've come up through the 50, they came back and tested it and supported, where do you think the next likely target's going to be? Wave 1, wave 3 being about the same, up here at the next moving average that everybody is watching, the 200. So this allows us to have much more accurate reading of what's going on in investor sentiment and where our likely targets are going to be. And based upon our likely targets, we can evaluate whether that's worth our time and money to be in one of these positions. Obviously, if this was going to be a 4% move, may not be worthwhile. Go find a better trade. If this is going to be a 25% move, that's much more compelling. Even more precise is a J-hook pattern bobble breakout. That's utilizing the information everybody's watching on their charts. Notice how MQ came right up after this big left-right combo, close above the T-line, hit the first resistance level, the 50-day moving average. What did we notice? When it pulled back, it held above the T-line. When it started trading positive today, what could we assume? That we have a bobble breakout, which essentially is a J-hook pattern, but much more defined by where the sellers came in and where everybody's jumping back in based upon that resistance level not acting as resistance anymore, and which we can see is a strong pattern. A J-hook pattern or a bubble pattern is even a more, what do I want to say, more compelling trade, because we're looking at the J-hook pattern, and when we're buying, it's on the basis that everybody else that's not using candlestick analysis are buying because they can see the 50-day moving average is not going to act as resistance. What we look for, what advantages we have with candlestick signals, we know the kicker signal is very strong, as we pointed out last week on neon. And you can see what the results have been from that trade. So we know when there's a reversal signal, a big reversal signal, APYX was one that we were buying today because the 10-minute chart kept us in this trade. And this also has the potential of more upside based upon the strength of this signal. So anytime we see new evidence or evidence of new bullish strength, we can kind of calculate when the profit taking is over and when the buying has started again. There's your bullish left-right combo right at the T line. You could be buying this one on positive trading. Is it going to go back up here? Maybe not, but at least it's got the prospects of moving up based upon some new interest coming into this stock. So right now with the Dow showing us that we have the probabilities that we're going to be trading higher, this is what makes those strong bullish charts that much more compelling, because there's not going to be the overhanging bearish fear out there that everybody's going to be enthusiastic, and that's what's causing those bullish charts. We're going to be doing a session tonight on how to set or identify the setups for even day trades where your entry points are exact for getting into a good trade based upon a candlestick pattern. So with that, we'll see everybody in the chat rooms.